Let's understand the difference between the journal and the ledger. Let's understand the difference between the journal and the ledger. So if we are talking about the journal, journal is what? Journal is a subsidiary book of the account. It is a subsidiary book of account, and we can say it is a primary book of entry, or we can say original book of entry it is, all right? But if we're talking about the ledger, ledger is a permanent or final book of account. It is a primary, it is not primary, it is a permanent and final book of account. And in the case of journal, we record the transactions on chronological order basis. I already told you, based on the dates, just date after date, you have to put the entries. That is your journal. Whereas in the case of the ledger, we do classify the transactions under the different accounts, right? And in case of the journal, we record the transaction without considering the nature of classification. We don't consider the different heads of account in case of the journal, whereas the heads are to be considered in case of the ledger, right? And in case of journal, we are having 5 columns. We were having the 5 columns. Which 5 columns were there? We were having the date, particulars, ledger folio, debit amount, credit amount. Those 5 columns were there in case of the journal. Whereas in the case of the ledger, we are having 2 sides, debit side and credit side. The debit side is on the left side, the credit side is on the right side, and each is having 4 columns. Each one is having the 4 columns, right? That was the case. And further, in case of journal, it helps us preparing the ledger. Out of the journal, we do prepare the ledger, and out of the ledger, we do further go for the trial balance. Trial balance can be prepared from the ledger balances only, right? So we have to put together all the balances, like we calculated the balances of the account, like the balance account is having the debit balance or the credit balance. Now I'll be putting all the balances under the debit and credit side under the trial balance, and we can check the arithmetic accuracy, and after that we can prepare the final accounts, right? Further, it says the total results of the transactions cannot be known from the journal. Very much important. You cannot be knowing the total of the results. It is not possible. But from the ledger, we can know the total of the particular account. We can know the total of the particular account. Like from the above example also, we can definitely be getting that which particular account is having what balance. We can know the total of the balances. In journal ledger, we are having the ledger folio, and in ledger we are having the journal folio, right? Reference to each other is being given. Preparation of trial balance is not possible from the journal itself, definitely not possible, whereas a trial balance is prepared from the ledger over there. Definitely it is the case. And you cannot be preparing the income statements at the end of the period from the journal, right? You cannot be preparing the same, but it is possible to prepare from the ledger balances. So from the ledger balances we can do so. And transactions are recorded in the journal. What you basically look at, you look at a simple voucher and you prepare the journal entry for the same. And for preparing the ledger, the source is what? Source is journal. You do basically look the journal as a source when you're going to prepare the ledger. And when you record the transaction in the journal, it is said to be journalizing. And when we do post the transactions in the ledger, it is called posting, or recording the transaction in the ledger is said to be the posting. So that was why I was using the words from the very start, that in you have to put the records in the journal, you're posting in the ledger, right? So we do post in the ledger, whereas in the case of journal, we record the transaction. It is said to be journalizing, right? Balancing cannot be done in journal because multiple accounts are involved, multiple transactions are just recorded in a chronological manner, so the balancing is not done and cannot be done. Whereas definitely the balancing can be done in the case of the ledger. And journal does not start with opening balance. It is not having any opening balance, but some ledger accounts start with the opening balance. Nominal accounts does not start with the opening balance, because nominal accounts balances are made zero at the end of the accounting year, right? But the personal accounts may be having the balances in the start, and the real accounts are having the balances in the start of the next financial year. Is that clear? So that is the difference between the journal and the ledger. Cash book is a journal also, it's a book of prime entry, and also it's a book of the permanent entry, right? So cash book is a permanent book as well as the journal book also, and it keep records of all the cash transaction, like whether you are is going to receive the cash, whether you're going to pay the cash, those all transactions are to be there under the same book, and that is said to be the cash book, right? Its ruling is just like a ledger account. It's divided into the two parts. In the case of ledger, we learned that there are two parts, there are two sides. One, it is a debit side, the other is a credit side. The left side is a debit side, the right side is the credit side. Same is the way over here. The receipts will go on the debit side, that is on the left side, right? And whatsoever the payments, those will be recorded on the credit side. Is that clear? So it serves the function of the cash account, and there is no need to open the cash account in the ledger separately. There is no need in that. So once you have opened the cash book, it's sufficient. All the transactions related to cash will directly be going over there. So cash book is the book of the original entry, as I told you, because all the transactions are in first hand recorded in the cash book only, and you need not to operate it particularly. You need not to basically maintain the cash, you need not to maintain or open the cash account separately in the ledger over there. That is why it is said to be that the it's basically said to be a ledger. Cash book is also ledger, that is a book of final entry. Permanent entry is also there, right? Because it is maintaining the double entry principle. On the very first hand, it is maintaining the double entry principle. So cash book is a subsidiary book as well as a ledger account. Are you clear with it? Further, now let's have a look at the kind of the cash book. We are having the single column cash book, double column cash book, triple column cash book, and the petty cash book. So these are the four types related to it: single column, double column, triple column, and petty cash book. Now, petty cash book is a separate topic. We'll be covering it after this particular topic. But right now, our concern is to know about the format of the cash book. And it could be a single column cash book, double column cash book, or a triple column cash book. Okay. So, in case when we're talking about the single column cash book, you're having two sides. The debit side is related to receipts always. The credit side is related to the payments always, and you're having the four columns in it. As we studied in the case of the normal ledger, there are four columns, right? There are four columns: date, particulars, ledger folio, and amount. Four columns in that. Okay. And when we're talking about the double column cash book, it could be with discount and the cash column, or it could be with cash account and the bank column, right? There are two separate things related to it. Like in the case of the double column cash book, it may be with the discount column, that separately before the amount you're having the discount column, or it could also be the case that instead of the discount you're having the bank column over here. So it will be telling you your passbook balance at the same point. In the same cash book, it will be telling you about the bank balance, right? So that's basically the type of the double column cash book. And you can also be having the triple column cash book, where the discount column will be there, cash column will be there, and the bank column will be there, right? All the three columns. These columns are fixed: date, particulars, ledger folio, these are fixed. Even the cash column is fixed, right? Only these columns may alter, and that will change the type of the cash book which is with you, right? So now you are aware related to what is cash book, why it is said to be the book of original entry, why it is said to be the ledger, and you also are aware the types of the cash book. We are having the four types of the cash book. We are having the single column cash book, double column cash book is of two subtypes. Like we can be having the two column cash book, like we can be having the discount column, or we can be having the bank column. But in the case of triple column cash book, we are having all the columns over there. We are having the discount column, we are having the bank column, we are having the amount column. All the columns will be there. Is that clear? Now, after that, now we are going to solve a question based upon it, right? So we'll be having a we are going to solve this particular problem statement over here, and we are to put the entries over here in this particular cash book, right? So be ready for the journal entries, and you should be memorizing the golden rules. You should be knowing the golden rules. I already told you about the golden rules yesterday. We are having three types of the accounts. Which three types? We are having the personal account, nominal account, and which was the third one? It was a real account, right? So you are aware related to these three types of accounts, na? We are having the personal account, we are having the nominal account, we are having the real account. These are the three types. Okay, now let's try to solve the questions based upon it. So first one, it says bank balance and cash balance is showing opening balance of rupees 20,000 and rupees 50,000 respectively. So it is indicated over here that the bank balance is being showcased, that the cash balance is being showcased, right? The amount is already given. The amount is already given over here. So in that scenario, we are to brought down the balances. We are to brought down the balances simply. So we can simply be saying that the first point is referring to bringing down the balances. So we can simply be writing so as to brought down balance to balance brought down. And what is the balance? The cash balance is equivalent to amount rupees 50,000 and the bank balance is amounting 20,000. So in bank column we'll be placing 20,000 and in cash column we'll be placing rupees 50,000, right? Now let's go to the second point. It says firm purchased goods for rupees 6,000 and machine for rupees 15,000. Now what will be the journal entry? Right now we are to put the entries into the cash book only. So we are concerned about the cash book leg only, cash account leg only, right? Otherwise the journal entry would be when we are purchasing the goods, purchases in as an expense. So expense is what? Nominal account, means purchases is a nominal account, and the golden rule for the nominal account is what? Debit all the expenses and losses. So purchases account is to be debited, and when we are purchasing the goods, we are paying the cash. We are paying the cash. Cash is an asset account, is an asset. It's a real account. And when what is the golden rule for the real account? The golden rule for the real account says debit what comes in and credit what goes out. We are paying the cash. It is going out. Debit what comes in, credit what goes out. So the cash account is to be credited. It is to be credited. And what will be the narration? It will be by purchases account. The narration will say by purchases account. I'm writing the statement number over here. And it will be by purchases account, right? Amounting rupees 6,000. We purchase the goods. And the second statement in the same scenario, it says we also purchased a machinery for rupees 15,000. Now which two accounts will be involved? Machine account is also an asset. So you received the machine and you paid the cash. Golden rule for the real account. Both are the real account. Machine account is also real account. Cash account is also real account. You paid the cash. Debit what comes in. Machine is coming in. So machine account is to be debited. And cash is going out. So cash account is to be credited. And we'll be writing by machine account. By machine account. So we are to use the cash column over here because right now we are dealing just in cash. It's nothing mentioned about the bank account right now. So it will be 15,000 entry over here. The third one, it says goods have been sold to Mr. Prasad for rupees 15,000. Now you have sold goods to some person. I told you in the previous video also that whenever a person's name is mentioned, you have to take care of the same. You need to keep in your mind when a person name is mentioned, it means you have sold the goods on credit, right? So the sales account will be involved. So sales account is a nominal account and sales is related to what? It's a revenue or an expense? Kindly do answer. Sales account is a revenue or an expense? It is an income. It is an income, right? You're gaining something, na? So sales account is to be credited, right? And Mr. Prasad account, you have given the goods to whom? To Mr. Prasad. So debit the receiver. Debit the receiver. So receiver is Prasad. So it is to be debited. Right? So this account is to be debited now. Is it clear? So what is to be done? We'll be writing to Prasad's account. This was statement 2. The third statement is to Prasad's account. Right? And it will be debited. Right? Now it will go to the cash balance or the bank balance. Where it will go? Now we are not dealing in cash for the Mr. Prasad. We are not dealing in cash for Mr. Prasad. It's not mentioned. It says the check has been received. The check has been received. Now when the check has been received, it will go to bank account, right? So it will be 15,000 in the bank column. Clear? Are you clear so far? Now let's move to the fourth point. Another check from Mr. Vineet for goods sales has been received for 12,000. You have sold goods to Mr. Vineet also, and you have received the check from him amounting rupees 12,000, and he has been allowed a discount of rupees 1,000. You have also allowed him discount of rupees 1,000. So check received, amount rupees 12,000, and discount is also allowed. So it will go in the fourth column, in the debit side only. Why? Because when you have sold the goods, who is receiver? Mr. Vineet is receiver. So Vineet's account is to be debited. So the journal entry for the point number 4 over here would be what? That debit the receiver. Mr. Vineet is personal account. Debit the receiver, credit the giver. So Vineet account is to be debited. And you have received the check. That will go to your bank account, and that is a asset. So debit what comes in and credit what goes out. For the real account it is. So we need to debit the bank account. We need to debit the bank account, and further Mr. Vineet account is to be done what? Mr. Vineet's account, it is to be credited. It is to be credited. Am I wrong? It is to be credited, not debited. Debit the receiver, credit the giver, right? So here we have received the amount related to it. So it is to be, the bank account is to be debited. So to Vineet account. So Vineet's account amounting rupees 12,000 it was. And also discount of rupees 1,000 was allowed to him. So it will be something like this. After that, now let's move to the fifth one. Salary of rupees 18,000 has been paid in cash. Now salary paid is an expense. So expenses are nominal accounts. Debit all the expenses. So salary account is to be debited, and further paid in cash. So cash, you have paid the cash. Cash is a real account. When you are paying the cash is going out. So the cash account is to be credited. So it will be by salary. It will be by salary account amounting rupees 18,000. So the cash account will be involved amounting 18,000. Further, proprietor withdrew rupees 7,000 from the bank for his personal use. It would be by the drawings account. From the bank, he has withdrew the amount. So the bank account will be involved and the drawings account will be involved. Right? So when he is withdrawing the cash is going out. It is to be credited. So the bank account is to be credited. And drawing account is a personal account. So he is receiving the cash. So debit the drawings account, right? So the drawings account is to be debited and bank's account is to be credited. So the seventh one it is, no, sixth one. It will be by drawings account. And it will be from the Bank balance 7,000. Right? Now you have to make a total, lump sum total of the same. Here it is 1,000. Here it is 1,000. And here the total is 50,000. Here the total is 20 plus 15, 35, 35 plus 12, 20 plus 15, 35, 35 plus 12, 47. And here it will be 6 plus 15, 21, 21 plus 18, 39. And here it should be 7,000 only. Now what is the difference? Which side is higher one in this scenario? The debit side is higher or credit side is higher? The debit side is higher. So the balance will brought down over here. Like not, sorry, carry down, not brought down. It will be by balance carry down. It is carried down, right? So it is 1,000 over here. And what is the difference over here? The debit side is more, na? The receipt side is more. So 50,000 minus 39,000, that is 11,000 here. And for this bank column, 47,000 minus 7,000, that is 40,000 over here. Now we have done the balancing also, right? So this will be the case. Have you understood the part over here? Have you understood the transactions over here so far? So we simply, first of all, you must be practicing over it, how to write the journal entries. You should be knowing when the customer name is there, the cash account is not involved. If it is mentioned separately that you have sold to him in cash, then it's a separate thing. Otherwise, if it is not mentioned, then definitely it's going to the bank, right? So in that scenario, we basically concluded with the journal entries and we just posted it into the cash account. And once you have posted to the cash account, you need not to post it again, right? Because cash book is a book of original entry as well as the book of permanent entry also, right?